Hello, welcome back to the Volunteer Income Tax Assistance training videos. In this session, we are going to discuss business income and talk a lot about some items that are in or out of scope for business income. My name is Chris Moon. I am an associate teaching professor at Iowa State University in the accounting department, the Ivy College of Business. So we are going to talk about how to report business income and determining which business expenses are within scope and what's out of scope, identifying some red flags when you're preparing a Schedule C, figuring out how exactly to fill that schedule out, and making sure we are talking with the taxpayers about what it is that they need to maintain. When a taxpayer comes in with business income, they may or may not actually have a tax form that they're bringing into you. Sometimes if someone is running their own business, they're going to have their own books and records. And sometimes that's kept a lot more organized than others, but we depend on the taxpayer to bring us in all the information about their income and expenses. It is possible that a taxpayer is going to bring in a Form 1099 NEC, that is a non-employee compensation. If they do, we are going to report that on the Schedule C. So they will have to, they'll report that as a separate business. Cash payments to self-employed taxpayers must be included as business income. And even if it's not reported on a 1099 NEC, that does have to be reported. So on when you get into TaxSlayer, there is a, you can go into Schedule C, and it gives you, you can kind of see on this slide here, basic information about your business. You have to answer questions about operating the business, the income, if there is a cost of goods sold associated with the business, that's going to be out of scope. If the taxpayer depreciates anything, that is out of scope. And if a taxpayer wants to use part of their home, they want to use part of their home as an expense, that is also out of scope. So you can go through each of these items on the Schedule C, and you just edit or begin each one of those, and you go through and enter the information line by line. What are the conditions Schedule C is in scope? So Schedule C is in scope for VITA if the taxpayer has less than $35,000 in business expenses. They must use the cash method of accounting. They cannot have any inventory at any time during the year. They cannot have a net loss from business. So if you do have a taxpayer that comes in and they have business income and expenses, it's important to just kind of do a quick look at that before you take the time to do the entire Schedule C and see if they're going to have a gain or loss. Because if it's a loss, we're going to have to send them away, and we may have already spent some time doing that tax return. So try to do some initial calculations and make sure that they're in scope before you go through all that work. Taxpayer cannot have any employees during the year, and they can't have paid for contract labor services. They can't have depreciation or amortization for their business, no deduction for business use of home, and they cannot have prior year unallowed passive activity losses from the business. So if a taxpayer does come in with business income, it's really important to ask very detailed questions about the income and expenses of their business. We want to make sure that the taxpayer actually is conducting a business. We'll talk in a minute about hobby income. We need to make sure that they have the records that will support their income and expenses, or that they can reconstruct those. They may have those from a Venmo account, or they may have them from their bank account. That we just need them to be able to reconstruct those records. We want to make sure by the time we are done with that tax return that all income and expenses have been reported and included on that Schedule C. It's important that the taxpayer is prepared to provide receipts and other documentation to support these in the event of an IRS audit. So this is one of the things that we need to talk to the taxpayer about and make sure that they are keeping those records with their tax return in the event that they do get audited, that they can document that. We need to talk to the taxpayer about the fact that their business expenses must be ordinary and necessary in order to be deductible. Also, along with ordinary and necessary, they must be reasonable in amount. So they are only allowed to deduct those expenses that are ordinary and necessary for the regular business that they are in, or conducting the business that they are in, and that they're reasonable in amount. There are some examples in the Link and Learn topic, so you can go through that as you're doing your studying for the exam, and just make sure that you know what are some examples of ordinary and necessary business expenses, making sure that they're reasonable in amount. Completing the Schedule C. This shows you some, some examples of expenses that are recorded on the Schedule C. So as you're going through TaxSlayer, you're not going to see this form itself, but it's going to ask you questions related to each one of these items. And so when you get to the point on TaxSlayer where it's going to say business expenses, any amount that the taxpayer paid for advertising, you're going to put that in the advertising box, which will end up on line 8 of Part 2 of the Schedule C. This is just showing you where it's going to end up. Sometimes you have to make a determination on what category an expense fits into, because it may not be absolutely obvious that it was advertising or that it was commission or fees or something like that. You just need to make the determination of where to put it. If you can't find a category that fits nicely in these expenses, you can see on line 27A, one of the options you're going to have is other expenses. And so when you go into other expenses, you're going to have to list these things individually, and the total of those other expenses that you have listed out will show up then on line 27A. Also important is to make sure, I've talked about in previous videos about the importance of making sure that we are staying within the scope of VITA. It's important for several reasons. It's important for liability reasons. It's important to make sure that your site can continue on providing the VITA service. We need to make sure, especially when someone comes in with business income and expenses, that we are asking appropriate questions and turning that client away if their situation falls out of scope. So if you have a Schedule C with hobby income or not-for-profit activity out of scope, all of these items are going to be out of scope. Expenses over $35,000, if they have returns and allowances, if they have cost of goods sold, if they have inventory, expenses for employees, business use of home, casualty losses, vehicle expenses reported as actual expenses, contract labor, depreciation or election to expense business assets, vehicle lease expenses for more than 30 days, accounting methods other than cash. Remember, they have to be a cash method taxpayer, or use the cash method of accounting. If they have net losses, if it is marked no on line G, if there are credit card payments that are not includable in income, and yes, indicating that there was a requirement to file a Form 1099. Again, you can look at the document that shows the scope of service, but this is just some items for business owners that are out of scope. All right, so just to summarize, we quickly went over business income and expenses. We talked about where to get that information from the taxpayer or from their forms that they have. Sometimes they may have to recreate their income and expenses so that you can see that. Must be cash income. In order to be, any cash income must be reported. They must be a cash basis accounting method. Qualified Medicaid waiver payments are treated as difficulty of care payments that are excludable from gross income. Talk about how the taxpayer needs to maintain their records of what they need in the event of an audit. Looking for red flags and how we might need the taxpayer to reconstruct their records. All right, so if you have any questions, feel free to reach out.